What do they know? Crypto whales have been buying billions of dollars of Bitcoin over just the past few days, a move that has historically signaled a major reversal is coming for Bitcoin and altcoin prices. But considering we're at the end of the 4-year cycle, prices have continued to bleed to the downside and negative news is all across the market right now, it's hard to believe that any kind of recovery is coming. So in this video, I'm going to explain the likeliest outcome for what we're seeing happening right now and what I'm personally doing with my crypto portfolio to prepare for what takes place over the next few weeks and months ahead. Do me a favor, hit the like button. This is one of the most important videos I've made in a month. Now guys, before we dive in and check out this chart which shows exactly what happens to the crypto prices after we see those major buying signals from monster crypto whales, just a quick disclaimer. Nothing I say in this video is financial advice. Everything I say is for entertainment purposes only. If you wish to invest in crypto, you should understand that it's risky and you can lose money. So don't risk money that you can't afford to lose, and always do your own research before investing in anything. Now that we had that out of the way, let's crack on with it. Now guys, before we check out this key chart, let's just quickly look at what's been going on in Bitcoin and see the biggest story here. The chart is not looking good at this key time. You can see that on Friday, Bitcoin dropped all the way down to around $80,000, bringing a lot of altcoins down with it. Since then, it's managed to bounce back to around $86,000, but right now, still not looking that strong, leaving many people out there to tell you that this is going to be a dead cat bounce, that this isn't going to recover anytime soon. We're going to roll over, and this is just going to continue to lower prices. And for those of you wondering what a dead cat bounce is, if you go back to the last bull market top, you can see that Bitcoin pushed all the way down here. It then bounced strongly, only to be rejected and then roll even lower, capturing people again in a second one here. Okay, dead cat bounces are very dangerous because they can catch both bulls and bears off guard. It can cause bulls to think that we're going to see a strong recovery and continue to FOMO strongly into the market, only to then see a rejection. And it can also cause bears to get stopped out on their major short positions just before the price pushes even lower. It can be a very difficult time to navigate unless you really understand the game that is going on behind the scenes here. And I believe that there is a game. So let me explain it to you. You see, if you jump across to this chart, you're going to see that the Bitcoin whales have been loading up with billions of dollars of Bitcoin. These are the numbers of entities, the number of people with over 1,000 Bitcoin. Now, a Bitcoin right now is worth $86,000, which means 1,000 of those is worth around $86 million, which is a lot of money. So why are they all loading up if the market is about to crash towards the downside? And are they right? Well, let's have a look. If we go back in time, you can see over the past few years, since 2023 at least, when this kind of Bitcoin bull market began, you can see that we've seen various different peaks and troughs for the Bitcoin price in the black line, and the green wallet prices have always kind of coincided with key turning points. As you can see, back when we had kind of this spike here for the Bitcoin price, we saw also a spike in the number of wallets. We then can see just at the start of 2024, the black line for Bitcoin dips down, and then suddenly you see this massive increase in the number of entities holding Bitcoin. Bitcoin at that point went from around $45,000 all the way up to around $75,000 in a couple of months. During this period of time, you can see the number of wallets surged, only to then top out pretty much at the perfect first top. Okay, so they seem to have started selling the top on that break here. It then went sideways and down for around 8 months. There was one accumulation point that happened on around the 5th of August. Now, the 5th of August was when the Japan carry trade pushed the prices down. What we can typically see is major accumulation whenever maximum fear and worry is hitting the markets. We can then see that the number of wallets holding big Bitcoin tumbles, okay? So from around December of last year, when we started to see the markets looking a bit hot, we started to see the number of people selling Bitcoin. You could see this as a very key indicator here. Now we get to April, you can see not really much in terms of buying up, continued to see lows, which is surprising. But all of a sudden, you can see that right now the numbers holding massive amounts of Bitcoin are surging towards the upside as the price is going lower. So what is going on? Why are these whales buying while the majority of the market is selling? Well, I've got my theory, and I'm going to explain it to you from a very simple standpoint so that you can make your own ideas here. Because it's very important that you can make your own decisions, your own ideas, so that when different things play out ahead of us, you know exactly what you're going to do. It's no good just sticking your head in the sand and hoping for the best. You need to be prepared for what's going to happen. And the only way to do that is by educating yourself into what is really going on behind the scenes here and the most likely outcomes that that will produce. Now, in my opinion, it's effing obvious to see that the bull market is over. Hold on. I'm not telling you that I think the bull market is over, but it's very obvious to see that it could be. It's the end of a 4-year cycle. We've seen Bitcoin break down beyond key strong points. It's the end of a 4-year cycle. In 2017, the bull market topped in December. Bitcoin came down. In 2021, the Bitcoin bull market topped in November, and then it came down. And in 2025, the Bitcoin bull market has come down strongly. Correct? So all of these things appear to be lining up perfectly, right? Well, here's the thing, and I believe it is a major trap that's being set here. You see, I read a book recently called Thinking Fast and Slow. Worth reading if you are into crypto and you're trading and you're trying to understand how things work. Now, we have in our minds two ways of thinking: fast thinking and slow thinking. I believe that the majority of the market right now are trapped in fast thinking that is making them believe that this bull market is over. And the market makers who control this market know how to make people think that this bull market is over. Now, the fast thinking mind allows us to basically kind of automate certain decisions. Okay, it allows us to think very quickly, cut off people's sentences, end what we think people are going to say. You can read a sentence, you can fill in missing words, whatever it might be. This is how you drive without paying too much close attention to actually having to drive. It's actually a practical thing for our minds to be able to think fast in some occasions, because if we don't do this, it will be a very slow, difficult life. So fast thinking takes care of automatic, emotional, instinctive responses. It's good for speed, terrible for accuracy. Think about that. Examples: you finish someone's sentence, you instantly feel a crypto chart is bullish, or in this case bearish. You assume a pattern exists based on a few data points, like 2 previous bull market tops in the 4-year cycle. But what about slow thinking? It's deliberate, logical, effortful, analytical, overrides heuristic, but only when forced. Heuristic is basically thinking like this, okay, fast thinking. And you can see examples: reading white papers, calculating risk, position sizing, challenging your first instinct. Now, many of us are thinking fast when we think about what's going on in the crypto markets. I turn on crypto charts in the morning, they're up, I feel great, okay? That's why you feel good today. Despite the fact that Bitcoin is now at 86K, you feel good because it's green, okay? You're just kind of shortcutting to the fact that green days are good days, red days are bad days. Today is green, we're all good. But it's not like that, is it? Now, once you start to think right now, the fast thinking could be a little bit dangerous for us if the market makers want it to be. We need to start thinking about what the fast thinking might look like versus the slow thinking. Now, the fast thinking will tell us that this is a 4-year cycle, and 4-year cycles end at the end of the year after the US election. It will also tell you that it ends when Bitcoin goes down a lot, which is now. It will also tell you that lots of negative news and bad press are going to happen. MicroStrategy has apparently been going under. JP Morgan has been trying to short the MicroStrategy shares. Donald Trump's been selling his Bitcoin, even though he said he wouldn't, and all these other things are compiling and sounding really bad. Our fast-thinking mind is just chucking all of these on the evidence pile and using them to make our very easy decision. We should all be bearish. And right now, guess what? It worked. Look. Everybody is bearish. Coinglass.com. You can see right now, if you go to Binance, shorts and longs, and yes, there's other exchanges. I know people will be down below, but listen, Binance is the biggest exchange. It has the biggest volume. And right now, everyone is going short. You can see there are billions of dollars, even up to 96K. There is over $2 billion in short positions. If you go up to $115,000 in Bitcoin right now, guess how much money in short positions will be liquidated? It's around $18 billion. $18 billion will be liquidated if Bitcoin hits $115,000. That's quite a lot of money. Okay, that's quite a lot of money. If you go down to the shorts, you can see it's 700 mil. Okay, so if Bitcoin was to go to 76K, 700 mil would get liquidated. Okay, which is not that much, right? 700 mil liquidated. In the grand scheme of things, that is not a lot of money. So everyone is going short right now. So what does that tell us about the dead cat bounce and all the other things? Well, it tells us this, and this is our first thing to know. It tells us that even if this is the end of the cycle, that we will at least get some kind of a relief rally. Why? Because it's very damn unlikely that exchanges will allow you as normal people to get away with this. Exchanges don't want you to get away with winning trades. Okay, they want you to lose the trades. The money moves up, effectively it's going to liquidate all the people who are overly short, and then it's going to roll over. This will create also max pain for probably everyone, right? Because not only does it liquidate all the shorts, but all of the longs, all of the people who are still managing to hold on bullish here, get even more excited. They put even more money into the market. All of a sudden, everything gets taken from them. Okay, this is a very painful scenario, and one that I think everybody is anticipating now, because everybody is anticipating it. What does that tell us? It means that it's less likely to happen. Remember, the majority of people in this market get things wrong. If you want to make lots of money in crypto, you need to take money from other people. Considering a few people in crypto make literally millions, if not billions of dollars, there are a lot of people who need to lose $100 here, $1,000 here, $10,000 here, whatever. Okay, those people need to lose in a big way so that a very small few people can win in a big way. Okay, and by thinking like everybody does, in the fast mind, there is a good chance that you're thinking like the masses, and you need to think like the slow thinker and start to really see what's going on behind the scenes. All of these evidences you're being given in front of you right now might not actually be that logical to suggest that Bitcoin goes much lower here without at least seeing a little bit more upside. And this is what I think this is showing us right now. Smart money is loading up in a big way because the smart money knows what's coming. So the fast thinking mind right now is saying 4 years. The slow thinking mind is saying 5 years. What's the difference? Well, typically we need to understand what drove both of these. And to quote Frankie from NoBS Crypto macro channel, go and check it out. He'll tell you that crypto is not run by the calendar, but it is run by liquidity. But what they're trying to make you think is that it is run by the calendar and not by liquidity. And this is why I want to show you this. This is global liquidity, okay? Total net global liquidity flows over the past few years. On the left, you have the Fed, you've got the People's Bank of China, you've got the Bank of Japan, you've got the European Central Bank, and you've got the Bank of England. Put all these together, you get the global liquidity flows. If it's above this line, it's positive. We see markets going up. If it's below this line, markets go down. You can see that we had bull market in 2013, for crypto, end of 2013, you see liquidity goes up, right? It comes down, bear market. Then what do you see? You see liquidity kind of going up, and then you see big liquidity push into end of 2017, December, bull market top, bear market. Then what do we see? We see kind of chopping around. We see COVID-19, and we see a massive influx of liquidity. We see 2021, massive bull market, okay? March 2021, we see that first leg up. We see liquidity fall, but there's still so much more liquidity in the system than there ever was before. So we get a double top bull market. We get a full-blown bull market. We get altcoin season. We get all the things we ever wished for. Then what do we see? We see down into 2022, bear market. And then we see nothing. We see flat. It goes sideways. And you're like, okay, fair enough. So liquidity caused those last two bear markets. And right now, we don't have any liquidity. So how have we seen Bitcoin go from $16,000 all the way up to $125,000 over the course of the last few years, even though there's no liquidity in the system? Well, good question. All of this liquidity here went somewhere, and it went here. It went into the repo market, which is the savings account of the Federal Reserve. So all of that money went into the repo market. Well, not all of it, but a lot of it. That's like the savings account for the Fed. So all the banks put their money into the Fed savings account, okay? And it went from zero on the 22nd of March, 2021. Interesting, which is March 2021. And then all that money flowed into the repo market where it was at zero and it went to $2.5 trillion. Okay, $2.5 trillion on Monday, the 26th of December, 2022. Let's go and look at where Monday, the 26th of December, 2022 is. Well, it's here. 26th of December, 2022. It's here. Okay, it's the very, very bottom of the Bitcoin market. Guess what happens? Bitcoin, from that day, goes up. It goes up and up and up. Okay, all the way until current day. But here's the problem. You can see it then drains. So the repo market drains and it goes all the way into crypto. So Bitcoin is going up, repo market's going down. This money is draining into stocks, shares, and Bitcoin. It's going into Bitcoin, doesn't go into altcoins that much. It's going into Bitcoin. It's caused these mini like altcoin seasons that got everyone's excited. Okay, back in December last year, back in like March of last year. Okay, got me excited. thought that we were going to see more, but we didn't. The repo market is now where it's at zero. So the only thing that's been driving crypto and giving us this false bull market over the past few years is this repo market. Now the repo market's at zero. We're screwed, right? That's why Bitcoin is now coming down, because there's no liquidity in the system. Look, liquidity is down, okay? It's not positively flowing in. The repo market is empty and there's no money. Guess what? In the next few weeks, you're going to see the US Federal Reserve turn off its quantitative tightening. Now, they're not necessarily going to turn on quantitative easing, although there's a very good chance that they do that sometime around the 16th of December, but they're going to turn off their quantitative easing. There's also a good chance that they cut interest rates a little bit, but that doesn't matter so much. And that's the best thing, because the Fed has a very big impact on the global markets. So yes, while the Fed might not be pumping money in, guess what? This chart is not made of just the Fed. It is also made of the People's Bank of China, who are going to inject around $1.4 trillion into their economy over the next 4 years. On top of that, the Bank of Japan are about to have to bail out their economy to the sum of around $100 billion. And on top of that, the European Central Bank are also starting to bail out their economy. Bank of England, everybody is forced to print money. So while the Fed might not be doing it right now, all the others are starting to print. And guess what? The smart money who is buying in here knows that this is all coming. So what's happened over the past few weeks? The market makers have created a shitstorm. They have used the 4-year cycle to trick everybody who believes that this is driven by a calendar and not liquidity into believing that this is going down. How do they make people believe it's going down? They start to move it going down. And on top of that, they create a ton of scary stories, like MicroStrategy is going to go under when Bitcoin hits 72k. If Bitcoin hits 72k, MicroStrategy goes bust, and then Bitcoin's done for, and all these other things. We also have quantum computing coming in, and Bitcoin's going to get hacked in 4 years' time, and all these other scary, shitty stories. Scary, shitty stories that we had every single time Bitcoin and everything went lower over the past few years. Now, am I telling you right now that Bitcoin can't go lower than where it is currently at? Absolutely not. And here's why, okay? It can, of course, come lower because it's already been lower. Can it come even lower than that? Of course. There's nothing stopping it from going to this level here. There's nothing from theoretically stopping it to going all this way down here. That's a difficult thing. This is where charts get people stuck, because if focusing too much on charts, all you're desperate for is a short-term thing to play out, okay? In the short term, theoretically, and I'm talking the short term, these sort of moves don't matter. Now, they do matter for altcoins, but I just want to tell you, let's say you were holding Bitcoin down here and you got in, would you have really cared that Bitcoin kind of pulled back a year later, or would you have cared that it pulled back here or whatever? You can see that it's moved, okay? Bitcoin has done this because repo gave it liquidity. If you go back to the last bull market, many altcoins, like Solana, had been through shitty periods of time like now. Solana pulled back around 77% to being worth around $1.05. By the end of the bull market, which happened within the same year, the same 12-month period, Solana had gone to $261. It's like a 260x. So it went down 77% to go up 260x. Mana Decentraland did something similar. Gala Games did something similar, although that went up about 500x. Many other altcoins went through a period where they got screwed, they got destroyed, and then they went up really, really strongly. In the short term, it is very, very painful holding altcoins when the market chops around. Okay, I understand that. But effectively, you've got to use the evidence in front of you to identify what you think is the most likely scenario to play out ahead of you. The best thing to do is to go back and look at history, to look at what is driving the charts, and build your own thesis based off of this. Now, I believe right now, the max fear and everything we saw the other day, combined with what we saw from kind of wallets and a lot of buying in from whales, probably mean that the bottom is somewhere around here. I don't know whether it can go lower or not. All I do know in the short term is that we will come up more quickly to take out a lot of those short positions on CoinGlass. Now, here's where I think would be the max pain point for this market. It would be something like this, because if this happened, many people who are bearish right now still wouldn't get in, because they would still be thinking dead cat bounce, dead cat bounce, dead cat bounce. Bitcoin would get to here, and then what? It would do something like this. It comes back down to 100, and everyone's like, thank God, I'm a legend. I called the dead cat bounce. I called it here first, and then what? Something like this. Something like this. This would be max pain. So yeah, That, I think, is the max pain move. Now, you might be saying, well, your max pain move would be to come even lower and bounce in and around this zone and do this. Now, in the short term, it's very difficult to know whether or not that's going to happen. No one knows where the exact price Bitcoin will turn around at any point. Okay, the only thing for me to focus on is really relationship between what is happening here and the bigger picture. I believe that there is a relationship between macroeconomics and what's happening in crypto. And I understand how difficult it is to maintain that conviction through such brutal kind of price action like this. I also believe that this has happened for a reason, and it's been made to be very difficult to shake a lot of people out the market at the most opportune moment. At the top of the last bull market, we saw mass euphoria. We saw people like Logan Paul launching crypto projects. We saw everyone buying NFTs. All the people on my YouTube channel in the comments, I made a video saying that I was going to sell Solana at something like $250, and I got called a retard, told I wasn't going to make it, and all these other things. Lo and behold, this is what happened next. Now, I didn't think that that was going to happen quite as brutally as that. Okay, but I do believe that we are going to see more liquidity enter the system. And unlike the past, where we've seen the repo market propping up Bitcoin, but nothing else, liquidity flowing into the system in a big way should cause all boats to rise. Now, if you go back to the last bull market, this was when quantitative tightening arrived. Quantitative tightening is what we've lived throughout this bull market. It's been very difficult so far, but this time it's different, okay? And this is why it's different. Last time, we had COVID. We had massive floods of money coming in, okay? This again, by the way, is from Frankie at No BS Macro. Go and check him out, okay? But we had massive floods of money coming in from COVID, stimulus checks and all these things, and then all the money drains. So in order to kind of like overcome this massive surge, the upside, we had to kind of have more time downside, okay? This is why it's taking longer this time to play out. But effectively, with the US job markets looking weak, money printing is coming. With China, Japan, and other countries' job markets, property markets looking weak, more money printing is coming. The everything code that Raoul Pal and everyone bangs on about is coming. The only thing in the short term that has people feeling bearish is their fast thinking. Go and read the book. I recommend it, okay? I'm not sponsored by the book or anything else. But guys, obviously, it's been difficult. It's been a stressful period of time. I am aware, it hasn't worked out how I thought or said it might work out in the shorter term. Okay, it's taken us longer to see those liquidity flows than I think even Donald Trump thought that it would. Whether we get cuts through this Federal Reserve chair or into the next one, I think it's pretty evident that it's coming soon, because the next Federal Reserve chair will be chosen by Donald Trump. And guess what? Donald Trump wants to see cuts. He's been putting it on Twitter over the last few months, saying how badly we need to see cuts. Cuts equal liquidity. Liquidity equals crypto go up. Now, guys, obviously it's been difficult for you, but I want to support you guys who have been supporting me. We've been working hard as a team to be able to try and make you some money through different airdrops and different opportunities as well. All you got to do to be able to go and win different airdrops, and we have multiple airdrops happening through our community all the time, is sign up to the newsletter. Links are down below, as well as that newsletter, which is going to give you opportunities to win airdrops, as well as share various different alpha, what's been going on. WEEX Exchange, who I've been partnered with for a while, are also offering 2,000 USDT for the first 200 signups. So right now, if you've already created an account, do me a favor, hit the like button. Just go down below, sign up for WEEX. You can use a new email address if you wish to go and create a new account, and potentially you have the opportunity to win 2,000 USDT for signing up over there. And on top of that as well, I've been running various different trading bots, which have been making some money while the market's been going sideways, down, etc. And we'll likely see some very good gains once the market starts to look more positive again. If you want to learn more about how to make different trading bots and copy trading bots that I personally set up, then use the link down below to join the Telegram, where you can learn about Pionex bots and all those good things. Guys, I hope you found today's video useful. It's a difficult market. Stay patient, have a plan, and I'll see you very soon in another video. Bye-bye.